closing cost when you buy a house. Now, is that a little bit of a complicated subject? Well, it might be, but we're going to talk about it right now. Hi, my name's Chad Palmer. I'm a realtor here for Century 21 Brandt Wright Realty in Elmore County in Wetumpka, Alabama. And if this is your first time to my channel, please subscribe. I put out new videos every week and we talk about real estate. I want to talk with you about closing costs, about what they are, how much they are, and who pays them. Now, closing costs are different in different parts of the country, and they can change based on your credit score, the type of loan you're getting, and your down payment. Closing costs are fees associated with a loan and the transfer of property. Now, I have a lender's disclosure that I want to show you so you can see what closing costs are. Let's take a look. Okay, this is a closing disclosure that I had on a closing not very long ago, and I wanted to kind of go over it with you so you understand what closing costs are. Now, closing costs are, in my mind, are divided up into two different things. One of them is the bank fees, and the other one is the attorney fees. And now listen, closing costs may be different in different parts of the country, but this is what they are here in Central Alabama. So let me kind of go over it with you a little bit. And you can see right here, these are the loan costs: administrative fee, origination fee. Now that is closing costs. These are closing costs here: the appraisal fee, credit report, flood certification, reinspection fee. That particular house, the appraiser required a few things to be done before closing, and then they have to go back and inspect it to make sure it's done, so they charge the reinspection fee. Down here in C, these are closing costs also. The ones that say title by it are the attorney fees. So you got the title work, the attorney fees, there's electronic filing fee, closing cost protection, lender's insurance right there. Those are the attorney fees. So now you've got the lender's fees and you have the attorney fees, and that's what is closing costs. Now here's some other costs associated. These are the recording fees, so these are part of closing costs. Anything that would pertain to recording the mortgage, that's closing costs. Now these are prepaids. This one prepaids and this one escrow. These are not closing costs. Prepaids are, usually the mortgage company is going to want you to pay a year's worth of homeowner's insurance up front. So that's why they call them prepaids. You have to pay those up front. This is prepaid interest right here. This is from the day that you close to the end of the month. They're going to charge you they'll sit down and figure out how much interest they charge you per day, and then they'll multiply that times the amount of days till the end of the month. That's your prepaid interest. Now your escrow account, which is right here, an escrow account is a little account that the mortgage company sets up for you. You don't have to do anything to set it up. But what happens is every time you make one of your house payments, a little bit of that payment goes into this escrow account. And what that's for is when your homeowner's insurance is due, and it's usually due once a year, this escrow account automatically pays your homeowner's insurance for you. They also pay your property taxes for you. Property taxes are usually due once a year. And so anytime that your property taxes are due, this escrow account will pay it for you. So you have to fund that account. We're going to talk about that a little bit later on in this video. I'll help you understand what an escrow account is and how much money it's going to take to get that funded. Now these last fees right here, these are really not closing costs. The home warranty is not closing costs. The real estate commission is not closing costs. See what closing costs are? They're bank fees and attorney fees and the recording fees to get the property closed. So now that you know what closing costs are, let's talk about how much they might be. Now, it's going to be a little bit different based on your credit score, what kind of loan you're getting, and how much money you're putting down. So that's very important to understand, and I think maybe that's why there's a little bit of confusion about exactly what closing costs are. But to kind of give you a ballpark figure, if you want to use 3 to 3.5% of whatever you're borrowing, that should get you in the ballpark as far as closing costs go. Now, who pays closing costs? Now, this may be a little bit different in different parts of the country also, but here in Central Alabama, the seller pays closing cost or a portion of the closing cost. It's going to be negotiated in the contract. Okay, let's talk about how much money you'll need to close on a property. I think that one of the reasons that people like to know about closing costs is because they're trying to figure out how much money they're actually going to need in order to buy a house. So this will kind of give you a little breakdown of it. So you're going to need a down payment probably. Now, it's no longer 20%. Years ago, it used to be 20%. The 20% nowadays comes in if you don't want to pay mortgage insurance, you've got to put down at least 20%. You've got to owe less than 80% of the value of the appraised price of the property. So if you can put down 20%, you won't have mortgage insurance. That's the biggest thing to remember. But your down payment now is going to be determined by what kind of loan you get. And if you're interested in a low down payment or 100% financing, I've put together a little PDF for you that talks about some different loan programs that may be available to you. You have to see if you qualify. I put down the mortgage companies that do those type of loans and some phone numbers of people, some lenders that you can actually call, get them on the phone and talk with them about low down payment or 100% financing loan programs that may be available to you. So if you get one of those, you need to understand what your down payment is. An FHA loan is 3.5%, so 3.5% of whatever it is that you're borrowing, that would be the number that you would put right there. Closing costs. Now, closing costs, we've been talking about closing costs. Now, the way they do closing costs here, our contract is written, our real estate contract is written where it's closing cost and prepaid. So we're going to ask the seller to pay a certain amount of money toward your closing cost and your prepaids. So what will happen is, let's just say the total closing costs and prepaids are $5,000 and we can only get the seller to agree to pay $4,000, then your cost in that particular case are going to be $1,000. Now, thing about closing costs, you can't finance them. You can't put them into your loans. Somebody's going to have to pay them. So we can't get the seller to pay them. In this example, then the buyer is going to have to pay them. So if they're $5,000 and the seller is only going to pay $4,000, that means the buyer would have to pay $1,000. All right, the next thing is your escrow account. Now, escrow account, we touched base on that a little bit, but basically your escrow account is your property taxes, your homeowner's insurance, and your mortgage insurance. Now, you may not have mortgage insurance on your loan, but if you do, it'll be part of your escrow account. Now, what that escrow account is, it's a little account that the mortgage company sets up when you buy a house. So every time you make a payment, a little bit of that payment goes into your escrow account to pay your property taxes and your homeowner's insurance and your mortgage insurance. So anytime your property taxes are due, which is usually once a year, it'll pay it for you, same way with your homeowner's insurance and same way with your mortgage insurance. Now, you have to fund that escrow account. Now, this is usually, it's going to be up to the lender. It could be a little bit different with your lender, but basically the lender usually asks for about 3 months of property taxes. So figure out what your property taxes are, divide it by 12, and then multiply it by 3, and you'll know how much money right here that you need to put right there. Your homeowner's insurance, they usually want 15 months of it, so you're going to have, they want you to pay a year up front, and then they're going to put 3 months in escrow. So you can get an estimate, find out about your homeowner's insurance, and you'll know what number to put right there. And then your mortgage insurance, you can talk with your lender about that, but they usually want about 3 months of that too. So this right here could be several $1,000s besides your closing costs and besides your down payment So it's good to know way ahead of time so you can save for it. It's not good to find out right at closing, of course, but these are some of the things that you should be prepared for. And I know you're probably going to say, well, heck, what else am I going to have to pay? Well, the only other thing that I can think of right now that you're going to have to pay is probably your home inspection. Now, there's no law that says you have to have a home inspection, so you don't have to do it. But listen, it's highly recommended. We highly recommend that you get a home inspection. It could save you tons of money down the road. It's a great thing to do, just to let you know what kind of condition that the house that you're wanting to buy is in, and also let you know that if you're going to have to be saving to repair anything or replace anything in the near future. Now, I would say the average home inspection around here is probably $300 or $400, although it does depend on the size of the house. The larger homes, it could be a little bit more. Also, it may be a little bit more too, depending on how many buildings that you want to have them inspect. So if you want them to inspect the dwelling that you're going to live in, and then maybe if you wanted to do a big shop that they wanted to that you wanted them to inspect, or a camp house, and it would cost a little bit more for them to inspect those buildings. But basically, an average is about $300 or $400. So I hope that helps you. I hope that made a little bit of sense. Closing costs are a little bit complicated. Just got to make sure that we're all talking about the same thing. Like I said, in different parts of the country, could be a little bit different. The safest thing for you to do is to go ahead and get approved for a loan, sit down with a lender, find out what kind of loan program that you can get, find out what the closing costs are going to be. They can give you a very good estimate on what those closing costs are going to be. Then you've got to, of course, based on what kind of loan that you're going to get, you've got to understand what your down payment may be, about funding your escrow account and getting a home inspection. So I hope that makes a little bit of sense. It sounds like a lot, I know. Now, if you like that video, please give me a thumbs up down below. Let me know that you liked it. Leave a comment. If you have any questions, I'll be glad to help you. It's Chad Palmer with Century 21, Brandt Wright Realty. If you have not subscribed to my channel, please subscribe to my channel. I put out new videos every week, and we talk about real estate.